Let's be different this morning. How about grabbing a chocolate croissant to take your network break? Maybe even add an espresso, go for broke. I'm Jonna Johnson.
I'm John Burke.
And today we're going to talk about a big acquisition by Salesforce, new switching from HPE, beefier DNS security from Cisco, quantum for good and ill, earnings reports from some heavy hitters in the chip and networking space, and more.
If you like Network Break, check out our other podcasts, including Day 2 DevOps, Heavy Networking, IPv6 Buzz, Network Automation Nerds, and Packet Protector. Get nerdy tech analysis, compelling conversations about infrastructure, cloud, professional development, and more. Find them all at packetpushers.net. And let's jump in on the red alert. Today, it's IBM Tivoli Monitoring that allows remote code execution. There were about 707 CVEs created in the week ending May 28th, and 2,547 were updated. 436 got to the critical level, scoring 9.5 or higher out of 10, and 19 scored a perfect 10 out of 10. The red alert this week, though, is CVE 2025-3357, issued May 28th for the widely deployed Tivoli Monitoring Tool, scored at a 9.9. This vulnerability involves the current version of Tivoli Monitoring, so everything that was patched up to the service pack issued in December of 2024. And apparently it allows remote attackers to execute arbitrary code on the system's host. At the root of the problem, improper validation of the array index on a dynamic array. So not checking the bounds on the array, always a problem. There is no published patch yet, so the only mitigation is to lock down network visibility and egress paths as much as possible using other systems.
Well, that's a big one, of course.
Oh, it's a very big one in the space. Tivoli's like 20% of the market.
Yeah, and I love the no published patch yet. So all you can do is lock stuff down as much as possible and pray for a patch. Not really where you want to be. All right, well, moving on to the news, as pretty much everyone knows, Salesforce is buying Informatica for $8 billion. Salesforce has announced it has reached an acquisition agreement with enterprise data management and integration platform company Informatica. The acquisition will give Salesforce more sophisticated data governance tools and data lifecycle management capabilities. Reuters quotes Salesforce CEO Mark Benioff as saying Salesforce and Informatica will create the most complete agent-ready data platform in the industry. The idea being that Salesforce's existing AI agents will be more useful and successful if the data they're trained on and work with is better managed. Analysts also like to point out that Salesforce tried this once before last year at a price of $10 billion, but the two couldn't come to terms. So suddenly $8 billion worked. Informatica has seen somewhat weak growth in revenues and market share, so maybe it's kind of come around to the idea that being part of Salesforce is not such a bad thing. We've got some links in the show notes, but John, what do you think?
Well, you know, one of my hats used to be Salesforce user and Salesforce admin, and I can really see some benefits for Salesforce users in getting better data management and data integration stuff, you know, even leaving aside the AI-related marketing talk about it. I'm not as clear on what the benefits will be for Informatica customers, aside from the possibility that Salesforce will pump a lot of new cash in. I don't think price cuts are in their future, though.
No, but I mean, the other thing to look at is Slack is now a Salesforce product, and it hasn't gotten worse, and everything's been fine, and prices haven't gone up. So I kind of feel like Salesforce is a good owner, if there is such a thing.
Fingers crossed. I hope that is correct.
I know. Now that I've said it, we've jinxed ourselves. Informatica and Slack users, please. Let's hope that didn't work that way.
So on the bad news front, I think it's bad news anyway, Google says the cryptocalypse is coming sooner than expected, or at least that there is a lower technological hurdle standing in the way of it. The cryptocalypse, of course, is the advent of cryptographically relevant quantum computers. And in a security blog dated May 23rd, Google revised its estimate of the size and performance required to be cryptographically relevant sharply downward, with the benchmark problem being cracking a 2048-bit RSA key in a reasonable amount of time. Google's new research paper revises their previous estimate sharply downward. where in 2019, they estimated that it would take 20 million physical qubits to do this in a reasonable amount of time. The new paper puts the number under 1 million, thanks to advances both in quantum algorithms and in quantum error correction. And it says that those qubits only need to be just a little bit better in terms of noise than the current qubits in service at Google. This kind of a system, they said, could crack a 2048-bit key in a week. And given that current systems are still 3 to 4 orders of magnitude too small, there's still a little time to act responsibly in this situation, in this case, by shifting to post-quantum cryptographic algorithms, such as those that the NIST is putting out, or by shifting from public to private key encryptions. There are links to the paper in the show notes.
And John, what is your estimate of the time? You say there's still time to prepare. What is it dropped from and to? Do you happen to have a thought on that?
Well, I think we have been tossing around 2030 as
Well,
sort of
yeah, I
the
was
most
about to
likely
say,
target. And I'm thinking, maybe making sure your plans are executed on by 2028 now makes a lot of sense.
yeah, this is my point to go neener, because quite literally we have been saying 2030 is the midpoint of our estimate, but it could come as early as 2027 or 28. This is one of the reasons why. The other big reason is, as I've pointed out a bunch, there are an awful lot of efforts underway across a broad spectrum of qubit physical types. So the idea that someone's going to get there faster than expected is fairly credible. It's the example I like to use is it's like the internet, like investing in the internet back in the day. You didn't know which of your 50 investments was going to be Amazon or Google, but you knew that whoever that by putting that investment out there, somebody was going to come out that was going to be game changing in a very short period of time. So I am not at all surprised.
I just want to throw in, you got to take into account also the rapid advance in quantum networking, literally
Exactly.
networking quantum systems together using quantum networks, because that will make it possible to use collections of smaller qubit count computers to attack the problem instead of having to get to one nearly a million qubit machine.
What we used to call in the classical computer space grid computing. And on that note, Juniper Networks and some partners demonstrate quantum secured networking among data centers and AWS. Juniper Networks, working with partners Lux Quanta, Mercury Cybersecurity, and I hope I'm saying this right, Lintia, has announced that together they've demonstrated deployment of a private quantum secured point to multipoint, very important, network among multiple on-premises data centers and an AWS Direct Connect hub in Madrid, Spain. The demonstration combined Lintia's optical metropolitan area network infrastructure, Lux Quanta's quantum key distribution, and Mercury's key management and post-quantum cryptography with Juniper's encrypted networking to illustrate that it is possible to make quantum secured networks in production. We did know this because Aliro Quantum has been out there, but it's nice to see other folks jumping in the space. And the good news here is that just as the sort of cryptocalypse is advancing, so too are the protections against it.
Indeed, it looks like a nice synchrony of developments happening there. And folks just need to keep in mind there are multiple paths to resistance to the cryptocalypse, and they should be making their plans based on what's going on in their shops and not assume they've got to wait for some massive breakthrough in the market. So speaking of massive breakthroughs,
Right.
maybe it's a massive break-in, a massive botnet has been put together from ASUS routers. Now, these are mostly used in home networks and small offices. The threat monitoring firm Grey Noise has announced that it has discovered the existence of a botnet that they are calling ASUS, and forgive me if I'm pronouncing that strangely. I didn't get a pronunciation key. AYYSSHUSH, and the reason for the SSH in the middle is important. It comprises more than 9,000 routers from ASUS and Linksys, D-Link, and Cisco, with the bulk of them being ASUS routers. The botnet is growing by the bad actors breaking into these routers using a combination of brute force attacks on passwords and exploiting an array of known vulnerabilities. Among others, it's exploiting an old command injection flaw detailed in 2023 in CVE 2023-39780, which allows attackers to add an SSH public key and a listener on an unconventional port, 53282. Because it uses ASUS's own features to introduce these keys and ports, these are persistent through normal reboots and even some firmware updates. So these as yet unknown threat actors, who are suspected to be state-backed, retain access even across reboots and updates. No malware is currently being installed. It's just a backdoor being put in place, and this is important, protections being turned off. A lot of these ASUS routers are coming with Trend Micro AI protection embedded. They're having that turned off, as well as normal logging activity. Gray Noise and ASUS recommend a factory reset followed by a rebuild with the current firmware, which has all the vulnerabilities patched, to resolve the vulnerability in question, and again, always advocating the use of strong credentials that are resistant to brute forcing.
Well, this sounds like the sort of thing that everyone should be warning their work from home staffs about, and possibly taking ownership of fixing, because quite honestly, if you are operating an environment in which a significant percentage of your employees work from home, you should consider those home routers part of your infrastructure and be prepared to protect them. Always scary out there. Well, turning to more data-centric news, Hewlett-Packard Enterprise has released a new data center switch with beefed-up processing offload. HPE Aruba Networking has released its new CX10040 distributed services switch. HPE says the new switch doubles the performance of its predecessor, the CX10000. Gosh, just by adding a 40, they doubled the performance. Just like the 10,000, it includes a programmable data processing unit, a DPU, in this case, an AMD Pensando. We're very familiar with that, to which tasks like encryption, compression can be offloaded. The 2RU switch has 8 terabits per second of capacity and can handle 4.8 terabits per second of MACsec encrypted traffic. It can also handle 1.6 terabit per second of stateful layer 4 inspection. The switch is designed to serve as a leaf in a leaf-spine data center network, or in the aggregation layers in a campus network or edge data center, and to support on-switch firewalling, microsegmentation, and edge-to-edge encryption. John, thoughts?
Well, I am always happy to see anything that will help folks implement real zero trust security in their data centers, and microsegmentation on the leaf switches is a great way to support that.
Sounds good to me. Build it in the architecture.
And speaking of building better security into the architecture, as we discussed on the previous episode, in that story about DNS names being hijacked by bad actors, Cisco has upgraded and renamed its DNS security line. So it's goodbye to Cisco Umbrella DNS and hello to Cisco Secure Access DNS Defense. Along with the new name, Cisco has added improvements in detection and mitigation of DNS tunneling attacks, and it has improved the detection and the ability to block on the fly domains that are generated by cyber attacks using the domain generation algorithm, or DGA, using that as a part of their command and control infrastructure. It can also block domains used for botnets, malware, and phishing, and improves the product's ability to help IT find compromised systems within their own networks.
So this is basically not a response, but it is a response that enterprise organizations can take advantage of to the threat that we talked about last week, right, John?
It's actually not clear to me that it will do something like scan your DNS space and automatically point out to you names that no longer point to anything active. So that is something I would have to look up in their documentation.
But it does sound like at least they're going in the right direction. They're directionally correct, if not, if they haven't solved all the imminent problems. So, good on you, Cisco. Although honestly, I cannot for the life of me. Hey, I'm not in marketing, but I do not see the improvement from Umbrella DNS, which is kind of pedestrian, to Secure Access dash DNS Defense. It just seems more words to be equally pedestrian, but hey, that's why I'm not in marketing.
Hey, there's a hyphen. That's always better, right?
Hyphens are good. Or is it an M dash? Anyway. Well, moving into the home stretch here, the most anticipated earnings report of the week did not disappoint. The big news from last week's earning reports was, of course, NVIDIA's fiscal first quarter results. The company reported earnings of 81 cents per share, up 33% year over year, and more important, handily beating analyst estimates of 75 cents per share. Revenue arrived at $44.1 billion, which is up almost 70%, 69% year over year, again beating analyst expectations of $43.2 billion in sales. And gross margins, meanwhile, were 61%. Well, not much to say except not bad, NVIDIA, not bad.
Yeah, that's still looking pretty world crushing for the moment. It'll be interesting to see how the ongoing tariff saga plays out. And how their updated line of sanctions acceptable chips will do when it comes on the market soon.
Well, and on that theme, NVIDIA basically teased a little bit and said it incurred a $4.5 billion charge due to new restrictions on the sale of its existing sanctions-compatible H2O chips to China. NVIDIA says if those restrictions hadn't been there, the earnings would have been a whopping 96 cents per share and gross margin would have been 71.3%. So, yeah, I guess take that. I don't know. If you take a deeper dive, data center revenue, which includes its AI chips, was $39.1 billion, up 10% quarter to quarter and 73% year over year. What a surprise. Cloud computing accounted for just under 50% of its data center revenue in that quarter, according to NVIDIA. Gaming revenue was also up 48% from Q4 and 42% from year ago period to 3.8 billion. Sales in the professional visualization and automotive robotics segments were up 19% and 72% year over year, respectively. There's a theme here, like up, good, better, beating earnings estimates. One wonders, is there any bad news whatsoever? Well, there's maybe a cloud or two on the horizon. NVIDIA's revenue forecast for the July quarter is below expectations, with a range with a midpoint of $45 billion below the consensus of $45.9 billion. And as we'll see, that 0.9 can make a difference. In what will strike absolutely nobody as a surprise, though, NVIDIA shares were up 4.2% in late trading following the report. Just notwithstanding, I love to use that word, notwithstanding their slightly dimmer next quarter forecast. Some links in the show notes.
I am not surprised at the growth rates on the obviously AI chips and the robotics and automation side, or automotive, I should say, side of things as well. I am interested that professional visualization is climbing so much more slowly than all these other spaces. And it'll be interesting to see what happens with that in the next couple of years. It'll be interesting to see if they meet their own expectations and come in below everybody else, whether that does anything to tarnish the stock in the markets, perceptions.
Well, and I have to admit, I have a friend who retired very young in her 30s. I did not realize until I'd known her for a couple of years and saw her wearing an NVIDIA t-shirt that she has financed her retirement from the stock that in her company. So, yeah, I actually am not unhappy about any of this because these are good, hardworking PhDs, she and her husband, who are raising their 3 kids and doing a fabulous job at it. So, hey, glorious news all around. That said, the next earning report is a company that did everything right and also beat expectations and yet had its stock drop. NetApp reported fourth quarter fiscal 2025 non-GAAP earnings of $1.93 per share, which beat analyst estimates by 1.6% and is up 7.2% year over year. The bottom line was also within the company's guided range of $1.84 to $1.94. Revenues of $1.7 billion increased 3.8% year over year as forecast, again slightly beating the estimate by 0.2%. NetApp witnessed growth in the all-flash array business and a 44% jump in its first-party and marketplace cloud storage services revenues. For fiscal 2025, revenues were up 5% year over year to $6.57 billion, while earnings were $7.25 per share, up 12.4%. Here's the thing. Despite these wins, the company's shares dropped almost 5%, 4.8%, largely due to its less than stellar forecast for 2026. So once again, there's clouds on the horizon, and this time the company's stock went down. Management stressed mixed signals for global macroeconomic outlook, reflecting an overall slowdown in growth, lingering inflation concerns, and a significantly higher uncertainty, particularly in the U.S. public sector and EMEA. John, thoughts?
Well, I think it really makes sense for them to be cautious in the face of current events. That the kind of uncertainty we're seeing about what's going to happen next should lead them to be more cautious in their projections for what's coming next.
Yeah, but I mean, here you have a tale of two companies. You've got NVIDIA over here going, yeah, hey, we're a little worried about what's coming next. And Wall Street responds with a giant roar, buy more stock. And NetApp says, hey, we're a little worried about what's coming next. And it's like, you losers, depressing. Sell. It reminds me of the fickleness of Wall Street. One of my friends, a finance guy, once told me that the challenge on Wall Street is you're not looking, it's like being in high school, and it's not about what girls you think are cute, or boys if you go that way. It's not about which ones you think are cute. You're always trying to guess who everybody else is going to think is cute. And for a lot of that, there's a lot of name brand, bling kind of stars in the eyes. So everybody loves NVIDIA right now, and other stocks maybe not so much. Moving to the next earnings report, Nutanix reported 42 cents per share, up 50% from a year earlier, compared with analyst expectations of 38 cents. Not too bad. Revenue rose 22% to $639 million, again beating expectations, which were $626 million. In fiscal Q3, annual recurring revenue from subscription services rose 18% to $2.14 billion, slightly below views. Wall Street had been hoping for 2.16. Nonetheless, the company's stock rose, and wait for it, largely because of a cheerful forecast for the upcoming quarter, in which Nutanix expects revenues of $640 million at the midpoint of guidance versus estimates of $638. So bumped its estimates up a bit. I don't know. At this point in the whole thing, it really starts feeling like the stock value is predicated on how cheerful the company can be about the upcoming quarter. It's almost like investors are seeking deep reassurance, like, mommy tells me everything's going to be okay.
Vibe investing.
Yeah, there you go. Thank you.
Yeah, it's nice for me, though, looking at Nutanix, seeing it do well. I've always had a real soft spot for hyperconverged infrastructure as a concept, and sometimes as a delivered product, and for any kind of cloud-like resource management stuff. It looks like right now Nutanix is feeling the love from other folks too.
And last but not least, Marvell Technology delivered its fiscal first quarter results in line with expectation, earning 62 cents a share, just ahead of analyst estimates of 61 cents a share. Revenue was $1.9 billion for the quarter, up 63% from a year ago, and again in line with expectations. However, once again, the future dimmed the stock price because analysts were speculating about the ongoing Amazon relationship, in which Marvell supplies Amazon with AI chips, and I guess they didn't like what they heard from Marvell, so they sold off some stocks. So I don't know, John. Again, it sounds like people are afraid of things that go bump in the night. What is this with companies delivering strong earnings in a hot space, but analysts get spooked because of futureware?
I guess it depends on what other kinds of things they might be seeing happening. If there are solid reasons to doubt the health of that relationship with AWS, and stuff can happen. We saw Microsoft begin shifting away from its old ARM architecture supplier to an internally developed system. If that kind of thing is in the cards with Marvell, then maybe it makes sense.
That's an excellent point, and one that I probably didn't spend enough time thinking about. It's easy to go off on a rant. So excellent point. We will watch this space. And that wraps up our earnings reports, as well as wrapping up this week's episode of Network Break. John, where can folks get more from you?
On LinkedIn, it's easiest to search for John Burke Nemertes. because there are so many John Burks on LinkedIn. And of course, you can go to the Packet Pushers site and hit the Heavy Strategy podcast, where I am on every couple weeks.
That you and I both. I'm Jonna Johnson. You can find me on LinkedIn as Jonna Till Johnson. Not too many of us out there. You can also find both John and me at the Numertes.com website, and we'd love to hear from you. And finally, speaking of hearing from you, please, if you've got feedback, comments, anything, do hit up packetpushers.net/FU. Don't forget also that we've got merch, another dozen podcasts you can subscribe to, an industry blog, 2 weekly newsletters, a community Slack group, a YouTube channel, an IRC group, and more. Find everything at packetpushers.net, all free with no login required. Thanks for listening.
Today on the Tech Bytes podcast, we talk about how to get more out of your NetFlow records with sponsor NetFlow Logic. Now, NetFlow has been around for a long time, and if you're already including flow records as part of your monitoring or management arsenal, you may think you're extracting all the value you can. But NetFlow Logic is here to make the case that its product, NetFlow Optimizer, will surprise you with how much more gold there is to be mined from those flows. Our guests are Sasha Velednitsky, co-founder of NetFlow Logic, and Bill Friedman, president. Sasha and Bill, welcome to the podcast. And Bill, if you could just give us a brief overview of NetFlow Logic, the company.
Sure. We founded the company in 2011, brought NetFlow Optimizer to market in 2013 with a view to handling very large volumes for medium and large customers, people with big networks, big data centers. So we've tested the product at 1 million records per second successfully without loss of messages. And we have one customer that uses it to process 500,000 records per second.
That's great. So let's move into the tool then, NetFlow Optimizer itself, the product. Sasha, can you give us an overview of what it does?
NetFlow Optimizer was designed to process network metadata. And the key differentiation between what we do and similar technologies is that we decided that NetFlow by itself is not as valuable as when it's integrated with other machine data collected in different systems. So NetFlow Optimizer crunches NetFlow and SNMP, and it feeds this data to different SIEMs and monitoring systems like Splunk, Sumo Logic, Exabeam, and so on. So it's not a NetFlow collector, it's a NetFlow processing engine.
Okay, so Sasha, you said NetFlow, and when I first met you guys, I was thinking, what magic is there in NetFlow records? Come on. I mean, I've been doing NetFlow stuff for years with collectors. And as you pointed out, you guys are not a collector. But I'm thinking like top talkers, applications, what else is there to get out of NetFlow? But that's the point of your product. You're taking NetFlow records and then adding metadata to it as you process them, and then pass that enriched NetFlow record information off to other platforms. Can you give us an example of some of how you enrich the flow records to make them more interesting?
Sure. So basically, our product does 3 things. It's volume reduction, we're going to talk about it later, enrichment, and then integration with various systems. So to answer your question on enrichment, as the audience knows, NetFlow is basically the source IP, destination IP, protocol bytes, packets. So nowadays, naked IP addresses are pretty much meaningless. The context need to be added to make it useful. And what we do with NetFlow, before we send it out to different monitoring systems, we add context to network conversations, such as user identity. We have integration with Active Directory, Okta, Microsoft Entra, and so on. We add applications and geo-IP location. We also have integration with various threat lists, where we would add reputation to information. This is very helpful for security investigations and so on. In virtualized environment, we have integration with VMware vCenter. We would add virtual machine. And even when we process Cloudflow logs, we would enrich Cloudflow logs with information which is not natively available. For example, in Amazon, the VPC flow logs do not have EC2 names. So when we process those, we would add EC2 name.
So you're saying with enrichment, you're saving me or the analyst or the analysis system some steps. You're providing context that I would otherwise have to go find out myself to associate to a set of flows.
Exactly, right. So we would add a context. And also, a lot of systems are doing enrichment at query time. They would basically collect flows And then when they go and run queries, they would bind IP addresses to whatever static databases they have. We do enrichment in real time when we process records, and we bind this context before we send it to Splunk, for example. So the information is very accurate, and it really saves MTTR.
Mean time to resolution, yeah.
Now, another thing you mentioned was volume reduction. What volume of flow records, or what kind of volume reduction are we talking about?
Yeah, NetFlow by definition is very voluminous because it reports every network conversation. Nowadays, modern devices may generate tens of thousands or sometimes even hundreds of thousands of tiny binary flow records per second. And ingesting this volume is not really practical. It's cost prohibitive. It slows down performance on these systems. It could be very costly. So we implement what we call intelligent consolidation, where we would look at similar flow records and we would combine them. So the same flow records that we see within a relatively short period of time between the same source and destination on the same ports are combined into a single event.
So it's almost like a dedupe function.
It's not dedupe. Dedupe is when we do deduplication as well. Dedupe is when network flow traverses through a number of network devices like firewall, router, switch, and so on. And all devices are basically reporting the same flow. So
Okay.
deduping is elimination of some of the devices because some customers are interested just on the fact that there was communication between two endpoints. They don't really care which device reported it. So this gives some volume reduction. When we do consolidation, it's not really deduping, it's basically aggregation. Another thing we do that gives a pretty sizable additional volume reduction, we have a way to ignore ephemeral client ports that are typically above 50,000, but we have a different way of ignoring them. And that's very important because nowadays the laptop going to a website or Amazon establishes dozens, sometimes hundreds of connections, simultaneous connections. And all these connections are separate flows. And each of them have the same destination port, the 443, but different client ports. Client ports carry no meaningful information. So we have a way to basically ignore them and combine all these flows, summarizing bytes and packets. So no valuable information is lost, but the volume reduction that is achieved could be 90% or even more.
Now, the volume reduction and the way you're doing it, this is a big deal in that for folks that are struggling with their budgets and looking for a way to justify the purchase of a tool like NetFlow Optimizer, that's it. I mean, the volume reduction there could be an ROI in and of itself because of just because of that volume reduction and the reduced cost of spend for other tools. Is that fair?
Yeah, absolutely.
Bill mentioned, network monitoring, troubleshooting, security investigation. Are those the kinds of use cases you're seeing customers turn to NetFlow Optimizer?
So in a lot of customers in the area of security, they deploy intrusion detection, monitoring north-south traffic. But a lot of our customers are interested to see lateral traffic, what's happening within their network. And are there any threats or potential threats that could be identified by monitoring lateral traffic? And one of the use cases is data exfiltration. So if somebody is monitoring network traffic on the edge, they may see the data leaving their network, but they don't see what preceded this event. And by monitoring lateral traffic and see unusual high volumes of data coming within organization, let's say somebody downloads data to a laptop before it pushes it out, we can actually prevent data exfiltration.
And lateral movement itself, I think, is a concern for organizations, depending on how they may have segmented their network. An attacker could, or a malicious actor could be moving through the network without ever hitting like a firewall or some other security enforcement point. But you could see it potentially.
Right. So yeah, lateral traffic is very important. Customers, by running different machine learning algorithms, can detect unusual attempts because we enrich flow data with user identity. They may see a user going to certain areas of their network where they are not supposed to be. And That's another use case to monitor user behavior.
You've mentioned Splunk integration with some other tools. How does that work? Is there actually a formal integration? Am I just writing records in a Splunk-friendly format from NetFlow Optimizer? How does that work?
Yeah, if we talk about integration with Splunk, we've been a Splunk technology partner for many, many years. We send data to Splunk in either syslog, key value pairs, or JSON. We also support OpenTelemetry. So there are all sorts of options. And then when the data is indexed in Splunk, we have applications in Splunk Marketplace for visualization and alerting. And also the data, we send it in Splunk Common Information Model format. So the fields, the NetFlow fields, are compliant with Splunk standards, and it could be easily correlated with other machine data that is collected in Splunk.
We have a number of visualization platforms and SIMs to which we can export our data.
Yeah, we export data in standard formats. I mentioned syslog. We make it key value pairs for easy parsing. JSON, obviously. We support OpenTelemetry output, metrics, and logs. And so practically any system on the market is capable of ingesting one or all of the above. So the integration with systems is really, really easy. It takes practically no time to configure it.
So we have customers who export, for example, to Sumo Logic.
Mm-hmm.
Right.
And you also mentioned you've got applications already written that I can just run in Splunk as opposed to having to do it myself or write rules for Splunk to analyze the flow records you're sending?
Right. So applications in Splunk was developed around data that we provide. Most of our customers use these applications out of the box. Some customers modify dashboards because to fit their specific needs. Our integration with Sumo Logic also includes an application in Sumo Logic Marketplace. I know that some of our customers use NetFlow data to send it to Microsoft Sentinel, and they can develop their own dashboards there or just use NetFlow data for forensic investigations, for example.
So you mentioned you can do volume reduction. You touted that as a benefit, but I think one of the issues that has come up with, flow records, if you just are sampling, there are events, whether, troubleshooting events or security events you could miss if depending on your sampling rate. So how are you balancing, volume reduction versus, wanting to beware of potential missed information from sampling?
So sampling is typically implemented on network devices, especially switches, where reporting full flows are competing with network device
traffic.
resources.
Yeah. Mm-hmm.
So there is nothing we can do about sampling. If somebody decides to send sampled flows to us, that's all we get. However, a lot of our customers, once they learn about volume reduction, that we can reduce it by 90% or more, they choose not to sample data and take advantage of volume reduction and at the same time get complete visibility without missing any low and slow attacks.
Because why would you at that point? I can just send a full, not unsampled, not sampled, a full, complete export of NetFlow records to NetFlow Optimizer. You'll deal with the volume reduction that I might have been worried about before, and I still have full granularity, you're saying, because of the way you're doing the volume reduction. There's no loss of insight into any data. I'm not going to miss those low and slow attacks, as you're saying. So that's the way I should be doing it if I'm implementing NetFlow Optimizer. Ideally, I'm going to send you everything.
Right. So the way NetFlow Optimizer was designed, it comes out with a lot of what we call logic modules that do different things with flow records, different type of enrichment, different type of consolidation. And at the same time, there's an option to send full fidelity, we call it full fidelity data to a chip storage, which basically a stream of original flow records still converted to JSON or syslog, so it could be easily ingested in Amazon S3, for example, for future forensic investigations. So the customers who take advantage of volume reduction could always go back and see what was the original full fidelity flow that resulted in what they see in Splunk. They can go back to Amazon and see what was the original flow data.
Hey, Sasha, early on, I think you mentioned something about SNMP data, because we've been talking about flow data this whole time, but you can ingest SNMP data and do something with that as well?
Yeah, absolutely. Yeah. Another type of data we process is obviously SNMP traps, and also we do SNMP polling. We recently introduced auto discovery, where customers can scan their network. Our auto discovery not only discovers devices that reply to SNMP polling, but it also we give them an option to classify these devices based on different SNMP fields, like vendor identity, or create what we call device groups. Then for SNMP polling, we developed a graphical user interface where customers can build what we call OID sets, basically going through SNMP tree and pointing and clicking on specific SNMP elements, building what exactly they want to do polling. They assign a polling interval, 60 seconds, 2 minutes, 5 minutes, whatever they need, and they can assign this OID set to a device group. So our product will be polling Juniper devices with Juniper OIDs and Cisco devices with Cisco OIDs, for example. And our customers use SNMP polling to monitor CPU utilization, memory utilization, disk space, temperature in the data centers. We recently have a customer who uses to monitor power supplies, what was the time to recharge or something like that.
So are folks able to test the product or get a demo? And if so, where would they go for that?
Yeah, we provide a 60-day trial license, fully supported, fully functional. So they can go to our website, netflowlogic.com, and there's a button, Start Free Trial.
Okay, so I could go to netflowlogic.com, hit the free trial button, and get a 60-day trial.
Can verify, Drew. That works exactly like that. I did that as we were getting to know NetFlow Logic. I did it myself.
And there's also a demo option?
Absolutely, yeah. We have a request a demo button. We can schedule a demo and discuss it before customer wants to try our product. We'll show the capabilities.
Well, one more time, if you want to get a demo or try the product for yourself, just go to netflowlogic.com. Thank you, Sasha and Bill, for joining us. And thanks to NetFlow Logic for being a sponsor. Sponsors ensure that packet pushers can continue to offer high quality, deeply technical content for your professional development for free. That includes a dozen podcasts on networking, cloud, security, IT strategy, and more, 2 newsletters, a YouTube channel, a Slack community, and even more. You can find it all at packetpushers.net. And as we say, too much networking would never be enough.